Mm. It's a brand new sound for radio. Radio culture. I go 1212 radio culture. We are airborne right now and we're live on iCulture TV, also www.gnewsnow.com. Scan that QR code. You will be live on iCulture TV on www.gnewsnow.com. And it looks like I forgot the dot in there. www.gnewsnow.com. You will see iCulture TV right there on the homepage. Click on it and you are airborne with us. We also airborne on our social media portals. We are currently airborne on the Facebook page of iCulture TV. And also GH News Now, which is our mother platform. GH News Now carries the entire news in its entirety. iCulture TV is the TV portal. So when you go to GH News Now, you will also find reports, you will find news, you will find printed material that you can enjoy. Radio culture. And of course, Radio Culture is our radio portal. Right now, we are airborne on all these platforms. Thank you very much for joining us. We're going to keep it brief today, but let me start with an apology. As you know, the show starts. Let me use the Ghana time because the daylight thing tricked me last week, right? The show starts at 4 p.m. GMT. It's way past 4 p.m. GMT. Why? Because today there was a special event at the Chief's Palace that we had to cover. And, you know, when you're dealing with Nananum, sometimes you have to like fall within their, their pace and everything. So the show was delayed a little bit because of that. Do forgive us, but we are very happy to bring you the show, even if delayed. And yes, indeed, today I am so excited because we have one of our experts coming. I can call him an in-house expert at this time, except that we're not paying him, so I have to be careful how I call him, But he is our go-to when it comes to everything minerals related. And I promise you, my brother, one day when we make money, we go give you some. Anyways, what am I talking about? I'm talking about our gold royalties. And there is news out there which we need to dissect, which is why I'm inviting my beloved brother to join me today to do that. And before we do that, let me also apologize that we're not able to bring you the second guest because of what I explained earlier. Second guest had to be somewhere else. Fortunately, my guest coming up next still could accommodate us, so we will be going on with him. But we are not able to bring you. We are not able to bring you the second interview, which is the Agri-business interview with Mr. Emmanuel Owusu. That interview will be postponed for another day. Today, we have all the time to talk to my guest coming up next. Please help me welcome Chairman of the Public Interest and Accountability Committee, minerals and natural resources expert, and a vibrant advocate for community rights. I can call him that because I know this man from way back and I know what he's been doing. Please help me welcome Mr. Richard Elima, who is the current chair of the Public Interest and Accountability Committee, PIAC. Richard, my brother, how are you, sir?
I am good. I'm good. Hope you are well too.
I am very well. Thank you very much for your patience. We gave you a time.
No,
something came up, we had to reschedule, and you are still here with us. We really appreciate that very much. Thank you so much.
Sure.
Okay.
Sure.
Now, before we start our discussion, there's a 3 minute or 4 minutes or so video. It's less than 4 minutes video that I would like us to watch, and we'll base a lot of our discussion on that. It's also to inform our viewers who, and our listeners, of course, who may not be abreast with the current issues, we will be back to discuss the main subject. Let's watch this video.
The 10th of March. It replaces the old system where mining companies paid a flat 5% royalty to the government. Now, the rate moves with the gold prices. Royalties can climb to 12% when prices cross about $4,500 per ounce. The policy triggered rare diplomatic pushback. Reports say that...
Okay, my apologies. We seem to be having some difficulty with the video. I'm not sure what's going on. Newsroom, reload the video for me, or I can load it from here if you give me the signal. What's going on? I can hear the audio all right, but we need to see the video also.
Companies paid a flat 5% royalty to the government. Now, the rate moves with the gold prices. Royalties can climb to 12% when prices cross about $4,500 per ounce. The policy triggered rare diplomatic pushback. Reports say that diplomats from the United States and China joined forces to persuade Ghana to delay the plan. Analysts say that the kind of coordination between Washington and Beijing is highly unusual. Both countries have major mining companies operating in Ghana. And it wasn't just the two superpowers. Diplomatic missions from the United Kingdom, Canada, Australia, and South Africa also raised concerns. They proposed a compromise, but Accra has declined.
They met us. They are not against the review in principle. The diplomatic missions wanted the 12% rate to kick in after gold hits $5,000 per ounce. But Ghanaian authorities rejected that proposal.
Mining companies are now warning about the consequences. Major producers say that higher royalties could make Ghana a more expensive place to invest while slowing new projects. Ghana's government disagrees. Regulators say that their economic modeling shows companies can still make strong profits even under the new system. The change comes at a time when gold prices are at historic highs, trading at above $5,000 per ounce. Ghana is Africa's largest gold producer and sixth largest in the world. The metal generates billions of dollars in export revenue every year, with close to $12 billion in exports reported in 2024. By linking royalties to market prices, Accra's idea is simple. When gold prices rise, Ghana earns more. And gold is only a part of the story. Ghana is also applying the same sliding scale royalty system to lithium, the critical mineral used to make batteries for electric cars. Royalties on lithium will now range between 5 and 12%, depending on the global prices. And other minerals still retain the existing flat 5% rate. So why is Ghana taking this risk now? Analysts say that part of the reason is financial pressure. Ghana is currently under a tough economic program with the International Monetary Fund. The plan requires the country to boost revenue and to stabilize its economy after a debt crisis. And Accra is now looking to its natural resources to help close that gap. The move also fits a broader trend across Africa. From the Sahel to Central Africa, governments are rewriting mining rules. Their objective is to keep more of the profits from the continent's natural wealth, which is a strategy often called resource nationalism. Ghana held its ground despite global pressure. In doing so, it may have redrawn the rules of the game, and other resource-rich nations could now follow its lead.
The world doesn't fit in boxes, so why should your news?
Okay. All right. Let's start the discussion. Richard, have you heard about this? Of course you have. What's the general idea here?
Well, I think there's a general acceptance of the fact that Ghana has not actually benefited much from the current gold boom as we are seeing. Look, average gold price for 2024 hovered around $2,300. In 2026, we are talking about gold price of $5,000 plus. That is a huge jump.
Yep.
And there's no doubt that the mining companies are reaping a windfall. But in the midst of all this, the question is, what is due the state? What benefit is the state getting from this mining boom or the gold price boom that we are seeing? Virtually nothing much has changed. I mean, as compared to what we could get from the boom as we are seeing it. So it is this realization that made government set up and say, look, we need to do something about it. Mind you, in the past, I think 2011 thereabout, Professor Mills' government introduced the windfall tax. Basically, it was going to do the very same thing this royalty is going to do. That in times of higher gold prices, when mining companies make supernormal profits, then they could pay more taxes to the state. But that windfall tax didn't see the light of day due to intense opposition from the Ghana Chamber of Mines and from other, quarters. But this time around, the government has stood its ground and luckily passed the LI. So basically, if I'm to answer your question simply, it is a desire on the part of government to also benefit from the boom in the price of gold as we are seeing.
I see. And this has actually been passed into law now.
Yes, it has. It is an ally. So, I mean, after 21 days, it becomes law once it is laid before Parliament.
Great. Okay. And how many days in at this point? Because it seems like we're getting close to that 21 days.
Oh, it has already passed the 21 days.
Oh, okay.
That's
All
why
right.
it has become law. So as we talk, it is now law.
Okay. Now, let me ask you this. The reporter referred to this decision as a risk. Is there a real risk?
Yes, in reality, yes, there is a risk. And the risk is that Ghana will be seen as an unattractive place for mining investment. If we are looking to attract huge multinational mining investments, then of course, the new law will be a huge disincentive to any big mining company that wants to come to Ghana, because then they will have to be paying more. Their overheads will go up as a result of the royalty. Now, before I move on, let me clearly explain why there's so much noise over this royalty, especially from our external partners.
Great.
There is royalty and there is tax. If you are looking at the fiscal regime of mining, there is corporate tax, there is ground rent, there is property tax, there is royalty, and then others. Corporate tax, as we talk, is pegged at 35%. Why are the companies not complaining? No problem. Mineral royalty is now, before the law, was 5%. Now, they didn't complain. Now it is a sliding scale, 5% to 12%, and they are complaining. Why? Because mineral royalty is pegged to production. It is a production-based tax. So once you produce the gold, you will pay the tax. Once you produce the gold, you pay. Irrespective of profit. It has nothing to do with profit. So even if you mine 1 ounce of gold, you pay royalty on it. If you mine 10 ounces of gold, you pay royalty on it. It has nothing to do with corporate tax. Corporate tax usually is a tax on your profit. So for 5 years, 10 years, a company can do its own financial engineering and tell us that they didn't make any profit. At that point, government wouldn't get a peswa in corporate tax. They can also tell us that, well, we didn't make any profit, so we are not going to pay ground rent or any of the other taxes. But for royalty, once you mine, once there's evidence that a single ounce of gold has left the ground, you will have to pay tax on it. And that is a mineral royalty of between 5 to 12%. So that is why the companies are very angry and they are very upset over it. Because at this point, no matter what, they will pay royalty to the state. That is what it is. The second reason why
engineer it in any way whatsoever when it comes to the royalty.
No, they can't do anything about it unless they can prove that they didn't mine anything at all. And if you are not mining anything at all, then what business do you have doing mining in the first place? Now, coming back to the question you asked, the risk. The second risk that we face is that we have a situation of a race to the bottom. A race to the bottom. It is simply a scenario where within Africa, countries compete against each other, not as to which country has the highest mineral royalty rate or corporate tax rate, but then countries seek to undercut each other. So Ghana has a mineral royalty rate of 5 to 12%. The investor comes to say that it is too high and it is making us unattractive. Then our next door neighbor, Burkina Faso, lowers their rates and say, oh, Ghana is charging 5 to 12%. I am charging only 3%. So investors move to Burkina Faso. Then Mali says that, oh, don't mind Burkina Faso. They are charging 3%. It is still too high. I'm going to give you 1%. Then investors go there. That is what we call the race to the bottom. We are all in a race, but we are heading towards the bottom instead of going up. So that is another risk that the current situation is potentially going to generate for our country. And then the third risk.
Excuse me, Richard, in the sense that we will be, because we're going in the opposite. In this case, we're not downgrading, we're going up, right? So are you saying that
yes,
we risk being isolated because everybody else will be moving in one direction and we will be...
Exactly.
Okay.
All exactly. Right. That is what is going to happen. Yes. Okay. And then the third one has to do with the government's own fiscal regime. The government's own fiscal regime. Now, as you know, fiscal regime vis-a-vis the companies within the countries, their own incentive to produce more. If producing means paying more taxes, then why don't you just cut down on production? That is also a risk that we may face. So Anglo Gold Ashanti in 2025, they produced 199,000 ounces of gold. They are going to pay mineral royalty on it. Now, per the new rate, if they decide, okay, 199,000 means we are going to pay so much to government, why don't we just reduce our production levels? And once they reduce their production levels, it also means that government's revenue generally will also fall, and the government will be hit in the long term. So these are some of the potential risks that come with what we are doing. The other side too, I mean, which can counter these risks, is the fact that, look, Ghana is already a well-established mining country. We are already well-established. It is not a new mining country that is in a hurry to attract many, many more investors. We already have some of the major mining companies in the world operating in our country, and they are doing well. They are making supernormal profits. One mining company in 1 year alone made almost $800 million for their investors. $800 million. I mean, you won't get this in other parts of the world. Some other company, I mean, we've not yet seen the 2025 fiscal reports, but it is likely that some of the companies might be hitting above $1 billion in profit. And I'm talking about profit, not just the gross. I'm talking about profit. That is after all the deductions and everything. They are making in excess of $1 billion from gold. Then the third one is that Ghana is a brand. Ghana is a brand when it comes to mining. So will a new company, a new investor, will they tell us that Ghana has a higher mineral royalty rate and therefore they will prefer going to go to Mali and Burkina Faso with all the political instability going on and so forth? Ghana remains a very attractive place for mining investors. I do not see why the companies are crying foul just because we want to have a bit of the profits that they are making. I just don't know why. I mean, when they were generating their scenarios, their profit scenarios, some of them used a gold price of $1,800 or $2,000 to do their calculation. Now you are hitting about $5,000. Look at the margin. Look at the margin from $2,000 to $5,000. And the state is asking you to pay a little bit more, and you are complaining. I think that is very disingenuous on the part of the companies.
It sounds like you're very much in favor of this law, Richard.
Yes, I am. Yes, I am. And if the companies are complaining, I mean, government has given them, there's a lifeline. There's a lifeline. There was a special levy that the minister imposed on them, a 5% levy or so. Is it? No, 3% levy, growth and sustainability levy. Just I think on Friday, government amended that growth and sustainability levy from 3% to 1%. So at least some concession has been made by the government. So they should be happy and accept it.
And government's argument is that there's still quite some food left on the plate, even if they come in. So all they're asking is taking a little bit of their profit away, but there's still enough, just like you've indicated. If you're making close to $1 billion and now you're going to make, say, 700 instead of that, is that what's happening here?
I don't see any problem. You see, the problem being that we've operated from ground zero, and now government has come up and it is now eager to increase the state. Companies are not playing along. Made so much profit on the back of our weak regulatory system. So now that we are trying to fix the system, why are they not playing along? Why? That is a big problem.
And then also there's that rare.
And again, if I can, my apologies, if I can add.
Yes, please.
In any case, all this brouhaha coming on and with the Chamber of Mines and the noise they are making, it will interest you to know that three companies in the country, Goldfields Ghana, Newmont Ghana, and then Anglo Gold Ashanti, they together, the three of them, they account for 70% of large-scale gold production in the country. The three of them, only three companies, account for 70% of our gold production from large-scale mines. Now, guess what? These three companies that I'm talking about all have stability and development agreements with government. So the new legislation does not affect them. They are not going to pay the sliding scale. In fact, most of them are still going to pay the 3% mineral royalty that they agreed with the government in their various development agreements. So I don't see why the noise. Government is not suddenly going to get so much money from them because they are not going to pay. Some of them have agreements that still have over 10 years left before it can expire. Some of them have 5 years, some have 15 years and so on. So I don't know. I still find it very difficult to understand why the Chamber of Mines will be making so much noise.
You've raised a very important point here. If these companies are responsible for as much as 70%, it means that on the best of days, this law is applying to what? Only 30% of gold revenue?
Yes.
Am I understanding that properly?
Yes. Very correct. Very correct. Only 30% of operators are going to pay the new levy that the government is the new royalty that the government has introduced. The big shots, the big companies, Newmont, Goldfields, Anglo Gold, they are still paying less.
That is, I don't know how to see. That really reduces my joy for the whole thing, because I thought that the whole idea would be targeted at these bigger companies, which are making great profit from the operations. If they are off the hook, who's going to be paying these the small, like what, mom and pop mining?
The relatively smaller large scale mines, they are the ones who are going to pay. The Perseus, the Adamus, those smaller ones, they are the ones who are going to pay the new rate. So I expect to hear them complaining, not these big ones, because let's go back. Goldfields had their development agreement in 2016, and for a period of 15 years, they've just entered the 10th year, so they have 5 years more. Under the agreement, they are paying mineral royalty of 3%. All mining companies in Ghana are paying corporate tax of 35%. Goldfields is paying 30% because of that agreement. AngloGold had their lease agreement in 2018, 2019. They haven't even crossed 10 years yet. They haven't crossed the 10-year mark yet. They had a sliding scale royalty of 3 to 6%, but then they are paying 3%. And they are also paying corporate tax of 30% instead of 35%. Take Newmont's Assin mine. In fact, the Assin mine just started. They just started. So, they still have over 15 years ahead of them to run out their mining agreement. Now, if somebody will ask, let me answer it before anybody asks. These agreements were ratified by Parliament, and therefore they are law. They cannot be changed. They cannot be changed unless government finds a way to negotiate with the companies, and then the companies, out of their own goodwill, decide to vary the agreement in favor of Ghana. If not, there's nothing Ghana can do except to wait for the expiration of the duration of the agreements as we have them currently.
Wow. Please explain that arrangement for me. What the agreement that makes this possible? What is that?
Yes, the Minerals and Mining Act 2006, Act 703, in sections 48, 49, states that the Ghana government can enter into a stability or development agreement with any mining company. In the case of development agreement, once you invest in excess of $500 million, you qualify for a mining agreement. So the law says that the agreement's duration should not be less than 15 years. Should not be less than 15 years. So for a period of 15 years or so, the law says conditions under which the lease agreement was granted cannot be varied to the disadvantage of the companies. In other words, if at the time of signing the agreement, corporate tax was 30%, and then 5 years later, we increase corporate tax to 40%, those companies that have agreements with the government cannot be compelled to pay 40%. They will continue paying the 30%, which existed at the time they signed the agreement. And the Constitution, again in Article, I think 16 something, I've forgotten the exact article, says that all these agreements have to be ratified by Parliament. Government entered into development and stability agreements with all these companies that I have mentioned. They were sent to Parliament. Parliament ratified them, and they have the force of law. If government breaches any part of these agreements, these companies will sue us at the International Court of Arbitration and will be in trouble. So for the duration of these agreements, government can do nothing about it, except, as I already said, except that the government decides to enter into a negotiation with the companies and reason with them that, look, when we were signing the agreement, gold price was 2,000. Now it is 5,000. So please, I am begging you, can you please increase the mineral royalty a bit so that the state can also get something? And then out of goodwill, if the companies agree to give out something, that is fine. But if they say no, there's very little government can do.
That is depressing.
Yeah.
Let me also ask you, Richard. So the sliding scale, it's
Yeah.
like it's a range, right? Who
Yes.
determines where the scale should be?
The law is clear. The current law says that if gold price, I think, if my memory is right, if gold price hover around 2,000, just around $2,000 or less, you pay the lower range, which is 5%. And then it moves up to 12% if gold price hits 4,005. It is a range that is set by government, not the companies. So government has decided between $2,000 and then $4,500 an ounce. If you fall within any of them, then there's a specific amount that you pay, percentage you pay as royalty. If gold price moves beyond 4,005, then you pay 12,000. If gold price is around $2,000 or less, then you pay the 5%. That is how it has been arranged.
Okay. All right. So there's a clear.
But this is not the first time. I mean, the first mining law we had, PNDC Law 153, passed in 1986, had a sliding scale of 3 to 12%. At the time, for 20 years, from 1986 to 2006, no single company in the country paid more than 3%, the lower range. No company paid more than 3%. They were all paying 3%. They were justifying why they have to pay 3%.
In that period, was there a marked?
Yes, at a point there was. Yes, there were booms. There were booms at the time, but because we had not defined at what point they pay more, they felt comfortable paying the lower range, which is the 3%. Then 2006, under President Kufuor, we had a new mining law, the Act 703, Minerals and Mining Act. Then we pushed it to 3 to 6% range. Again, there was no definition of when to pay 3%, when to pay 6%. So they were still paying the 3%. And then Professor Mills' time, 2011, he said, look, to cure this madness, look, let's have a fixed rate of 5%. So irrespective of the gold price, everybody pays 5%. So we fixed it at 5%, and they were paying the 5%. But we still had development and stability agreements where we asked the companies to pay 3%. 3%. So that is the history. So we've gone back to the old system now, but just that this time around, we have a definition of when to pay the 5% and when to pay the 12%.
I see. I guess it's a science, which some of us would be like my mother would say, when a dog sniffing soap, it smells nice to them, but they don't even know what that is. Because if you take 5 to 12 with all the different steps in between, is there a possibility for the government to, for instance, out of maybe needing more money, say, okay, we'll keep it at 11 instead of 7, for instance?
It is possible. It is possible. I mean, if you check the law, the Minerals and Mining Act, the minister has been given a lot of discretionary powers. So the minister what they can do to circumvent the law is to have agreements with different mining companies. A mining company, for instance, can enter into a stability agreement, a development agreement with the government. I said, look, instead of the 12%, you come and pay 8%. That's all. And then that is it. They will not be affected by the law. So there's a lot of discretionary power given to the minister to decide when to enter into what agreement with which mining company. And that is a danger to the aspirations of those who are very happy that the range has gone up.
Why? How so?
Oh, it is a danger because, I mean, two things. One, like I've already explained, we've set it at 5 to 12%. So the patriots in the country are very happy oh, now Ghana is going to reap more benefits from its gold resources.
Yeah.
Then we burst their bubble. We burst their bubble and tell them that, look, the 3 companies that produce 70% of your large-scale gold are not going to pay this amount. Yes. So it just defeats their aspirations. That is the first thing. And then the second thing too is you have a minister who can exercise a lot of discretion and say that, look, mining companies, if you have sufficient investment, go first. They just approached the government of President Mahama's first term, 2016. They told Mahama that, look, we had $300 million to invest, but if you don't give us a stability agreement, we are sending the money to Burkina Faso. At the time, the government needed a lot of money. They said, oh, okay, please come. So they went and they had the agreement, and they are paying 3% of mineral royalty. So this kind of discretion is what I'm talking about, that for the patriots who are rejoicing that we are going to capture more of the benefits, these 2 factors somehow burst their bubble, and it's not pleasant enough.
Yes, that's what it did to me this morning, because I didn't know that at all. And now people can see my real-time disappointment learning that, But I hope my next question, and more importantly, your response, brings a little more warmth to us who are, not as impressed anymore. But here it is. So reports are that the small-scale sector, according to reports associated with the Gold Board, for instance, the small-scale sector seems to have upped the ante in production, right? From what we read, from what we were told the other day, that if you check the production figures, the small-scale sector seem to have moved up significantly. Now, that sector falls within that 30%. So at least with the boom of the small-scale sector, we will at least be getting something small from there. Connect the two for me, the boom in the small-scale sector and this new law.
Yes. First of all, the small-scale mining sector does not fall within the 30%. The 30% is for the large-scale operators. It's the large-scale operators. By law, the small-scale mining companies do not pay mineral royalty. They don't pay mineral royalty. So they are not even affected in the first place. So there's a proposal on the table now that why doesn't the government place a minimal tax on small-scale operators? So instead of applying the 5 to 12% tax on them, which would be a heavy burden because they are small-scale, why don't we place something in the region of 3 to 5% tax on them as mineral royalty, so that the state can reap the benefits? There's a proposal like that there. But then there are also concerns. Number one, the small-scale mining sector is very, very, very informal. Very informal. And their operations are very fluid. You don't get them in specific places. Sometimes they move. They come, dig the gold, and then they move. Sometimes a registered company, I'm not talking about Galamsey, I'm talking about registered mining companies. A registered small-scale miner will get a concession, mine it within 2 years, the ore body is finished. They move on. Where are you going to chase them to get the tax? That becomes a problem. So their very nature makes it very difficult for government to tax them. And then secondly, there is also the argument that, look, every dollar, every cedi that the small-scale miners make is retained in this country.
The economy.
Every amount of money they make is retained in the country, because by law, small-scale mining is reserved for Ghanaians.
Okay.
So theoretically, it is only Ghanaians who are mining. So all the monies that they make remain in this country. So we get a lot more real economic benefit from the small-scale miners than from the large-scale mines. Large-scale mines who have 99% of their shareholders based outside the country. So every year around March, they have to repatriate money to their shareholders to pay them their dividend, and that bleeds the economy. It also affects the stability of the city because of the dollar exchange rate, the exchanging the city to dollars that they have to send to their shareholders. So because of the benefits the small-scale mining sector provides to the economy, others have also argued that, look, let's leave them alone. Let's leave them alone instead of placing this heavy tax on them. So these are the two arguments that have been preferred to exempt the small-scale miners from paying any mineral royalty to the state.
I see. That is two ways, because I do agree that only if we can confidently say that the money is being retained in the economy, then of course. But we also know that there are people who front for, people who are not necessarily Ghanaian, but that's another discussion in itself. But thank you for
absolutely.
Yes. Okay. All right. No. So why does let me put it this way? If I'm Ghanaian right now, where is the good news in all of this for me? Because that 30% is being paid by how many companies? Do you know roughly? Spread across how many other? Because the smallest scale miners are not part of this. The biggest whales are not part of this. It's just the mudfish in between who are catching the brunt of all of this.
Yes.
Where's the real?
We are the 30%. We are talking about roughly 12 or 13. Yeah, I think 13 large-scale mining companies who are not part of the big three. Yes, they make up the 30% remaining, who will be paying the new mineral royalty sliding scale. Unfortunately, they together are paying the lesser of because they produce less, so they will be paying less. And the big guns who are supposed to be giving us more money are shielded because of their stability agreement. What is the good news in all this? I don't know if there's any good news, but the fact that we have even legislated, the fact that we have gone ahead to legislate the 5 to 12%, for me, I think it's a bold step. It is a very bold step. A bold step in the sense that now any new companies that come in will now be compelled to pay the new rate. The other good news is that there's a review process going on at the moment. I have been to some of the meetings. A review process to expand the stability and development agreements from our law. So very soon, once Parliament gives the okay to the amendment bill to the Minerals and Mining Act, we will no longer have stability and development agreements in our law. The last branch of stability and development.
I'm sorry, would that be like retrospective? Would that be going forward, or would that affect?
No, it will not affect those who already have. So those who already have the agreements will run their full course.
Okay.
But once it ends, no more agreements for them. They will have to pay the realistic rates that have been set by government.
And then everybody else
these things
have to deal with that going forward.
Exactly.
Okay.
Exactly. So these are the things that give us some comfort that let's look at the medium to long term instead of the immediate term.
I think there's something to rejoice about then. I think so.
There is. If you are a patriot.
Yes, I think so. Okay, so
yeah.
The lithium is the other thing, big elephant in the room, right? With all this happening, we've also learned that lithium will also be affected by this law. Now, there was, not too long ago, last time we spoke to you, we touched on that briefly with, the lithium and the rates, the interest rate they were offering and all of that. Now, lithium is also going to be put on that same scale. Is that good news?
Oh, it is. And in fact, the lithium agreement signed by the previous regime had all these arrangements that we are talking about. They were very generous incentives to the state, Very, very generous. I mean, for instance, corporate tax rate was higher. The state's participation rate moved from 10% to 15%. And the Minerals Income Investment Fund was even giving money to purchase additional shares. So the government was going to get a lot more money from the lithium until this new government came and then they varied the agreement. Royalty in the past government was 10% for lithium. This new government says it's now between 5 to 12%. But in the case of lithium, it is not production based. It is value addition. Value addition. If companies agree to add a little bit of value to the lithium here in Ghana, then they will be paying less. But if they choose to export the raw lithium, then they'll be paying more of the mineral royalty. It is a way of creating an incentive for value addition, processing, and to promote local industrialization and so on. And it is not just Ghana. Zimbabwe has even gone the full throttle. They've banned totally the export of raw lithium. You go to Botswana, they've done the same. You come to Guinea, and now Ghana is also following their footsteps. So it is a movement going on across Africa that we do not want to export our raw critical minerals. Now the word is critical minerals now. The world needs more of the critical minerals, and Africa holds many of these critical minerals. So that is our advantage. We can compel the companies that are coming, add value to the minerals. We don't want to be exporting raw like we have been doing. You export it raw, they buy it at $2,000 an ounce. They add value to it and sell it back to you at $10,000. So they make a lot more money at the farther end of the value chain, whilst we make far less. We who own the resources earn far less. So we want to change the narrative. It's not going to be an easy journey, but that is what the government aims at doing. President Mahama, when he was in Addis Ababa during the Accra Reset Conference, made it clear that from 2030, Ghana will ban the export of raw natural resources. It is a huge task, but I'm sure on some other day we can have a discussion around it. Because I've written a paper on it. I will be glad to share it with you.
Please.
There are pitfalls. There are bumps on the way. As to how we can overcome these pitfalls and bumps on the way, we wait to see.
I hope you have presented a copy to the president and to all those people whose signature will go on papers to make sure that yeah, that's the thing. We have to tap the brakes.
Yes, it's been published. So okay. I'm just praying they'll come across it and read.
Okay, all right. I will lead a charge to be a bit more proactive and push it. Let's tweet it at Newsroom. Fifi, please. See if you can tweet tweet at the presidency, okay? Make sure they get to know this. This is a very serious discussion we're having here. Thank you. Before we wrap up, I have a couple more questions. So first of all, all of this is heading towards what has been dubbed resource nationalism, right? So
exactly the topic of
Africa. Right, some countries are doing it a little more aggressively, quote unquote, but Ghana has its own style, and it seems like it's working. And from the report, we also hear that people are actually, some other African countries are actually looking at Ghana's model of resource nationalism. Yeah. Please touch on that for us.
Resource nationalism, in simple terms, means that it's a mechanism where states seek to exert a lot more control over their own God-given natural resources. Mm-hmm. And it is manifested in two major ways. And we've seen its manifestation within two periods in our history. In the period immediately after independence, we experienced some resource nationalism, where mining companies or the mining sector was nationalized. So under President Nkrumah, all mining companies were subsumed under the state mining corporations. So we had the State Gold Mining Corporation, the State Consolidated Diamond Corporation, we had the State Manganese Corporation, the State Bauxite Corporation, and so on and so forth. They were all state-owned, except Ashanti Gold Corporation, now Anglo Gold Ashanti Obuasi Mine. It was the only private mining company in the country. But apart from that, all other mining companies were state-owned. So the profits they were making, every revenue they were generating, came straight to the state. That is one form of resource nationalism. It didn't sit very well with the conservative economists at the time, the Bretton Woods institutions and so on, who were preaching a more kind of an open economy, sort of, you know. They wanted the government to open the country to economic competition, allow multinationals to come in and so on and so forth. And they justified it by the rot that was happening with these state-owned corporations. So in 1986, in fact, 1983, when the new military government of Jerry Rawlings, they approached the World Bank for money. They said, look, we'll give you money on condition that you reform your mining sector. And the biggest and the first thing they requested was to open up the mining sector for investment. So we passed the PNDC Law 153, which I referenced, and allowed multinationals to come into the country for the first time. So multinational mining companies started coming, and we divested ourselves of all the state mining corporations, sold them off to these foreign entities who now run them as private entities. And we only retained 10%, just 10% equity stake in the mining companies. That is one form of resource nationalism that didn't go too well. So from one extreme, we went to the other extreme. The other extreme is the neoliberal kind of economics that we preached. We replaced the liberal one with. Now, the neoliberal says that open up the economy, free market, free market, free market. So we sold all our mining companies to foreign interests. We said, oh, take everything and give us only 10%. Anglo Gold Ashanti Obuasi Mine as it is, we have 0% in that company, zero. The state doesn't have any interest in it. That is the other extreme of the line. So for many, many years, for over 40 years, we have realized that we have mined so well, we have gotten so much money from mining, but the state keeps getting impoverished. The communities where mining takes place keeps getting poorer. So what is the problem? The problem is that export revenue show that we make so much money, but very, very little of that money stays in this country because they are foreign companies and they repatriate almost every money that they make from this country. So they go and sell the gold and keep 80% of their profits in offshore accounts. It doesn't come into the country to benefit us. It benefits their shareholders. So now African countries, once we went through climate change, energy transition, the critical minerals, now everybody is going after critical minerals. Then the African Union said, look, wait a minute. We cannot repeat the mistakes of the past. So now let us take charge of our own destiny. Let us take charge of our mineral resources. That is why we see a new movement towards countries wanting to own their natural resources. They are not going back to the old model of nationalism, where you nationalize the mines. Now they say, oh, foreign investors are welcome to the country, but you are going to operate under these conditions. One condition is that add value to the minerals. Another condition is that improve local content. So employ more local people, give contracts, supply contracts to local companies, etc., so that more of the value of the minerals can be retained in the country instead of taking everything away. There was a time when Newmont was even importing bread from the US, bread and vegetables from the US. How crazy can that be? You know, but under the new arrangements, this thing has stopped, you know. So we are mining under our own terms now. And from 2030, like President Mahama said, no more export of raw materials. If you are interested in our gold, come with the mindset that once you dig the gold, you add value to it first before you can export. That way, we'll retain more of the value in the country.
So expertly explained. You know, when we started the interview, started off on a bright note because of my interpretation of the law and what was going on.
Yeah.
Along the line, I got a little bit half depressed because it was interpreted to me properly. And at the end of the interview, I feel better because I know that there's still something to smile about. And even though it's not that huge, you know, quantum leap that I thought we had made, it is still progress and it's a step in the right direction. That's my interpretation of it all. I believe that's yours too, Richard.
Yes, that is it.
Thank you so much. Before we go, finally, lithium, right? When not too long ago, there was all that noise about the government, this current government stepped down the agreement from the 10% to 5%, whatnot. Now, with this sliding scale properly applied, is it a better deal than even the 10% the previous government put in place? Would you say that?
Yeah, first of all, let me stress that the previous government's agreement did not find space in any law. The Minerals and Mining Act had a fixed royalty rate of 5%. So when the government went ahead and granted an agreement that said you should pay 10%, I mean, theoretically, it didn't find any space in any law. And that meant that any government could come in and change it. But now this government has introduced the LI. They have legislated it, that it is between 5 to 12%. So now the legal basis has been defined. The parameters have been defined. So there is a lot more certainty about the implementation of that law than there used to be in the past. On the face of it, the 10% fixed rate looked good. It looked very good. At the time they were, signing that agreement, lithium price was very high. Then this government comes in 2025 and they noticed that lithium prices had fallen. Lithium prices kept falling to the point where the company that signed the agreement themselves, they said, look, initially we said we want to pay royalty of 10%, but with the fall in the price of lithium, it is not going to be economically sustainable to pay royalty of 10%. And that is what the government listened to and said, okay, you are raising concerns about the price of lithium, which keeps changing. So why don't we have a sliding scale together with the ability to process part of the lithium in Ghana? And that is the agreeable timeline that they had, which they are now going to run with. So I believe the new one gives more certainty. I mean, you can talk to any businessman and they will tell you one of the key things they expect from government is certainty. Certainty. I mean, the ability to know that over this period of time, this is not going to change. I'm going to pay this amount and so on. And that if the prices go beyond this level, this is how much I'm going to pay. So everybody knows, government knows, the companies also know. There will be no ambiguity whatsoever. So for me, that it's very, very important, and that is the best way to go. As I said, on the face, the 10% looked good. What if the lithium prices went through the roof? Once it goes through the roof, you have fixed it at 10%. You can't get any benefits.
Yeah.
But if you made it a sliding scale, tell them that, look, if the prices go beyond this level, this is how much you pay. Then the state will be in readiness to be reaping the benefits from any price hikes in the future. And indeed, analysts have predicted that in the next 5 years, lithium prices will hit the roof. That's the prediction. So we need to stand in readiness for this eventuality so that the state can also capture more of the benefits.
Richard, meaning if we had started mining, if any of these companies had started mining, they could have challenged the government position to charge them 10% because it wasn't even based in any law, really.
Oh yes, they would. Yes, that is true.
I see. Richard, thank you so very much. And how's the position treating you, chairman of PIAC? How is it treating you so far? What's going on at PIAC? You should know about.
Very stressful. Very stressful.
Oh boy.
we are in the process of producing our annual report. Annual report for 2025. We'll launch it in the first week of April. So I'll keep you posted.
Please keep us posted. We'd love to be at that event. Thank you so much.
Sure, I will.
Thank you.
You're welcome, sir.
All right.
Okay.
Thank you. Talk to you later. Richard.
Okay, thank you. Bye-bye.
All right. Richard Elima is a minerals expert, and he's also the chair of the Public Interest and Accountability Committee, PIAC. Thank you very much. So, as I said earlier, we are bringing you just one interview for today, but the rest of the show is just around the corner. Please don't go away. We will be coming your way with the rest of the show. Stand by for GH Reports after this very short commercial break. Newsroom, let's go for a short commercial break. When we come back, GH Reports. Justice, please position yourself and get ready for GH Reports.
Since 1994, crafting natural products with organic shea butter and red palm oil. All products are available on walmart.com and Shopify, or visit our website at chrismark.com.
Bienvenido.
And you're easy.
If it wasn't for me, marrying your sister.
You're not meeting him. I'm meeting him.
You don't speak a little Spanish at all. What is this? You want to embarrass me?
Don't worry
You are
about it.
fired.
And you're easy.
Look at the money I spent this week.
Driving you crazy. What's his name?
Hello?
And you're easy.
We got chicken legs. Thinking like a child when the thief come around. Thinking like a child when the thief come around. Big man, what one? You look something. What I'm doing?
Coming soon to this station.
1 week. You have till this week.
Adana wa sia wo fie ha. Na mo mfra me. Mo kwa me ho kwa na.
E ba le say na ni passes. What are these sisa ba ko ni.
Adana wa sia wo fie ha. Na mo mfra me. Mo kwa me ho kwa na. Adana wa sia wo fie ha. Na mo mfra me. Mo kwa me ho kwa na.
E ba le say na ni passes. What are these sisa ba ko ni bi.
Amen.
Semhuna kwa.
Amen.
On my floor. You know what you. On my floor. Yeah, bra.
Na wo ni
Nonsense. I fell into him. And I'll give you the blood. Show that him. What's he saying? Mama, come on, finish him. We are for by now. Get. When him surround the wall. Can you? Who can you? Tiaba. Who Tiaba? Me wale na cover. I current computer mine. Or some private Phoebe, our down way. I had Daniel for dear woe, or thing in some scary see. Take it easy. This is the Versace suit. Versace. Take it easy.
Okay, Radio Culture, iCulture TV. We are back after that short break, and it's time for GH Reports. And the GH Reports, we are taking it live from Assin Foso, where our reporter, Justice Mafo, is bringing us GH Report. Before we go there, actually, Justice, please stay put, and let's introduce the show. 1 second, please.
It's a brand new sound for radio.
Radio culture. Radio culture. Radio culture.
It's a brand new sound for radio.
Africa from an African perspective. Africa from an African perspective. Okay, so here is Justice Mafo with GH Reports. Where is he? Newsroom. Justice was in the green room. What's going on? He just left the green room. We will try to get him back as soon as we can. Please stay put. We will bring him as soon as we are able to get him back in the blood of the slain. Oh, Zayana Yahweh. Oh, Zayana way. Oh, Zayana Yahweh. Yo, listen, man. My name is Ja, beloved. You can call me Kwesi back when the occasion calls for it. You are watching iCulture TV. Keep it locked. iCulture TV. Africa. From an African perspective. Africa from an African perspective. All right, apologies for the wait, and we are right back to GH reports and to our reporter. Justice. GH reports.
GH reports. Is it no? I'm free. Kumasi anasa Asante Mantemu. Is it ne? Ya diabe piemu. Ewo mfimfini Mantemu. Na tutu kese. Official launch no ana koso ewo nana ahimfie EFFUTUAKWA traditional council no omotena adwam nana no matena konwa etena ase ehye kwampa ombefa so a afia mu 2026 tutu kese afahye na nkasa no ebitumi akoso amane ma yetoti na nana chire mu se ode primpuntu de ama oman no tutu kese afahye no yede primpuntu afi yede prenkabom de ama Assin Foso ema ni nyina anu ntino ye na na so have exclusive interview kura enche bia no mbehu se ya drop no wo ye YouTube GH News now ye Facebook ye be drop no ba bia sa interview we obi a nye bi ya ma obi akwan ya ma obi antwa GH News na Agriculture TV for nko na ma ye kwan a ene na sa exclusive interview no na niam pi na course so Central Regional Police Commander ebe donate sika 10,000 Ghana cedis and can sika 100 million e support Jumadi ni say 2026 Tutukese festival no but they support na no matena kunya omo fan support afashe no na bibia nkoso to ten empanimfo pi na ba ho district police commander omo so ebe donate ya so for empanimfo omo nyina be donate chief imam omo so nyina ba wohwe religious leaders na omo nyina ba Christopher ba Muslimi for ba na nanom so a omo so se bi omo gun some den so form omo nyina so ba ma Jumadi no ye krabehwa me kan se official launch ne de time omo share so omo de be 1 hour 30 minutes no na nanom timi share so edi bo share no so pepepe don hrefa don hre ba ko ne fa ekoduru na wie ye na chese Jumadi ni nyina aba na wie ya ne sa enu ntino na ne tofa bom nyina ne se Tutukese official launch na nanom atarakonya wo EFFUTUAKWA traditional council omujina omutumi so de Jumadi no ehihye so a yes on the 11th of December 2026 and yede festival no ebehihye so 11th December 2026 na yede Jumadi ni nyina ya afahye ni nyina akwakowie on the 21st December 2026 intino nananom so esrese omo ewa chirichiri bencheye sa 2026 de no afahye no festival no yede to nsa afro omo akwantuom titiru Mr. Kwesiba ko amena wo kasai munyina mombra 11th December no munyina mombra na monne nananom emedisa Tutukese afahye no omo won krampumpunem antamu munyina mra omo Ghana haya so won krampumpunem antamu so won finfim antamu heya so wo asante mantamu ba bia wo bia Ghana fa na nyina ba bia wo bia no bra na yemfa mprempuntuo emfa ema EFFUTUAKWA traditional area no na asrese yema pi na no hia ewo nema mu ha titru enkronketu a wona ne kuromu ha no oba kwanye no obesre His Excellency John Dramani Mahama obeboa omo na wabeye sa kwan ni nyina ena afi nsusu omu nsu omo no nsusu wose nana kire mu se uhwe nsuo ni bia wode masebe aboa kora se wonom a onnom ni nyina wo exclusive interview no mu a yede bebre omo ewo Agriculture TV so GH News now yede bebre omo wose nsuo no sebe wonoma wa aboa se wonom kora wonom enu nti no obesre se omo beba Assin adehye omo beba se omo beboa ma Tutukese afahye 2026 de no yede ahye so no omo ba omo soso mwa no mpe bibi kakra na omo mfa mwa oman no se de be ya Assin Foso ene EFFUTUAKWA man nyina na betuma fa ne ntoma pa efra enu ntino ne tofa bom nyina no launching a na nanu matena kunya EFFUTUAKWA traditional council e de hye so.
Very, 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 very good report. Very nice one, pa. Na mami bisawo ebuka some of the events are ebe constitutive festival and last year they no mo ye no ye hu se omo ye aduane sembini no bi ni ade this omo bo na se ene dey launch na akeke se bia ye part logo ne huntuma na bibisa akeke
omo chire mu se de ye hu no afra se na ye last year no kra de aho preso na omo de ye nintino de ye hu ye nyina ye bo omo ba so omo ya de no kro omo chire mu omo se ye hu no hwe afi na omo ahye dem ahye afahye no 2026 de no omo ahye no chinchire pa eno no ye behunu ne se edimu kra asene last year de no a ye hunu ye no niema pi na na bekoso omo pese Ghana fo ana se Assin mamufo sa abrofosem na yemfa ntonchen na de kan se traditional way ene sa ye kasa no emfante no yemmo ye homoden ase yebesua ye kurom kasa no ye kurom aduane no yemmo ye homoden se yebedie na ibeja sa fried rice ne sugary foods no yemfa no nto nche na yeni okuruma aduane eno nti no omo kire mu a this year de no de ebeye adutwam enkoye te se last year de no nti so omo de tonsene ni no omo ya assessment a omo hu ni se last year no niam pi na ho no mu a entwe ya this year de no omo de niam begu akwa mu a yehunu ne se de yehunu ne last year no.
I see. Now, area how social, you were a teacher, or politicians near there. John Boydu, or pet MPP, National Chairman AD, a honor free, your friend now, you have many didn't come out, or your friend, or no, a honor free, or share a penny candidate Japan, a honor free, near the you who side to teach you a honor, you who. Nipa politicians that did so our lunch now.
Lunch na se ne de amanyoni bia ma ho. Said the medical de two dwan. Ye nananom sebe omo EFFUTUAKWA traditional area omo na yekoto omo ho. Na ye papa nom Central Regional Police Commander or then a pound for ba honum said the mechan a police for ba ho and nanom Islamic Muslimi for so ba ho intino launching the amanyofo ama ho na said the 2025 na the amanyofo no ba ho jombo du ba ho bi honorable Kennedy Akompro Japan ba ho bi intino we ne the ye pa ho to makeke na me wogidie se 2026 ya no omo de afasha ne hyehyɛ so a ade omo nyina ba gitwi na wo maba na emo bi ompeso omo de boa man no omo nso so yi di aboa
Pepe now sound back on the last thing me who said na me hwɛ ne live mo bo dwuma pa stream team why there the quality of the stream is up there na me hwɛ na me ti say na MC ne kese ha de ye appeal for funds bia wo ha sisi enso be collection Hona kranso mi husa manfo etutu ekeka omo nsase kakra otu bisa manfo nya breakfast on betai tutu kese 26 na chipa kroma for na nkasa kra no sana wo hu no ho
said the MC no edit two dwa no nana asare ona edi dwade no mo chia me odi two dwa no na o se ye nya appeal for fans bia ho na mum ode kasan mu no ma sofo a obedi mu no o kire se mo bia wo a person ode bo bia no fabra enti free sika Ghana sika no 10,000 Ghana cedis edikosi 1 cedi de owo bia obetumi de abo bia no fabra en na ohwa na ayefe keke obia wo pepa ana se opese obo amadwumadi no etimi kra be hwenti no 10,000 for sore koye 20,000 2,000 for sore koye 5,000 for sore koye 200 cedis for so sore koye 100 cedis 50 cedis 20 cedis abc from say twan ema 1 cedi for nyina so etimi sore koye a omo wo pepa no se obo pese omo bo aman no wo hwe omo de 1 cedi no koye atimi se enko wo bi pa anga o diskani nyina be kona nso oni bintino ye hope say 2026 what I say
it's not your friend widow smite those are the kakre bia wo baby kwa kofa aba nana hu
donti o de ne 1 cedi 72 cedis no watimi de aba beboa se afahye no intimi ntumpon na ye ne oman hene a oda EFFUTUAKWA traditional council no din komona na ikire mu se afahye no se ne be ya enfro manfo ni ntino this year omo ya next year omo be ye na omo ja atumu kakra wo ho no mo anoma sa ye baako na omo ja atumu ana afi omo ye grand deba kese pa no de ombe sheda de krata akoma se be mampanyini kura se omra no me omfa na ni munyam so emeta adwumadi na chinti no omo be break kakra se de be ya enfro omanfo ro
yo na ni kwakra yes sorry na okumeni ohwe na hokani ade no hwe tsanya Assin Foso no Assin Foso for especially I see budget is so now. Who are reporting for send who no. Send who can send who say that's the man for pen answer but more done. Send who see measure na who can wo.
Na hoke kan wo soro say ye hwe last year festival no course no a utum say wo kire na achievement obeye wo hene no niema a waye de abo akuru no and won hwe say manyoni baba beboa no ansan na waye wono an kasa develop kuru no a say videos no ba agriculture TV so na wo hwe videos no a tu say nwumre ni etwa video no a wan hwe abeka say be US and answer Canada. A corner did them who inacity rules no do a carriage come or more ya lines did them your baby seven pedestrians and no more Uncle Faquanshia bia manana a fat on horse one a DVL for ne one more yep upon more hair a quansra home some so or munina so yes, I near man or didn't she say, Pogua, year born man for her by. I don't know, Nana Mecca said, Chrono Dadrin than a coma so ye pa. Say, ye man of fine set on to us what or Becoded in pa. Now, Messer said, Kuna, a bamboo biama, you are him for the Brimbo Honoma, or my sorry, free had a mark of Traman on here. It do so me goons and about the goons and I know what's our Trabuchi. Now, idea. One man for an antiquum. Inti unim the air how in the Omusu Efa Hontino. One of the Metimiaka said, or General man for a hopper. Or General man for Hontino. You will be said 2026 in Indiana. December no. I catch a TV. Machine was said, you better Yelena Nibidia fashion. Nana so swada ya se obehwe ni se ye beba ya betiki coverage na man kama pa asa very
good like that. Now next week na me boy the sign Okay, all right. Justice Mafo with the GH reports. Yes, time for very short commercial break. When we come back, it will be time for arts and culture. Synergy, please come in the green room. It's time for arts and culture. We'll be back after this break.
remember when I first played to students, some of them would just leave the hall because my instruments looked obsolete. But then I kept exposing them to their own music. And now they are responding to it. After the reggae and the rest, they have time now for their own traditions.
It's a brand new sound for radio.
Radio. Culture. Okay, we do apologize for our inability to bring you arts and culture this week. We sincerely apologize for that. We will see you next week, God willing, with another show. In the meantime, my name is Kwesi Esuanbako, and I brought you this from Studio One, Texas, USA, ably supported by my team in Ghana. Thank you very much to my stream team. Thank you to the production team. Thank you to the administrative team and everyone else who helps to make this a success every Sunday. Thank you very much. We will see you next week, God willing. let's leave with this video. After this video, it is goodbye for me. But let me also make one quick announcement. We'll be rolling out our drama series on iCulture TV very soon. We have 2 drama series that are going to be running back to back very soon. Watch out for promos on our social media portals and everything. You will be seeing promotions for those. The first one is called Enyezi, which is about life in the Big Apple, shot in New York and in Ghana. And there is also the second one, which is called Kwada Sufie, my personal favorite. I love those series. You should too. But thank you very much. After this video, you will not see me anymore. You see me, God willing, next week with another episode of the live stream. Salute. Thank you.